Alright, welcome back. First of all, not financial advice. These are just my own opinions and thoughts. Do your own research. And markets are extremely volatile, extremely risky, and do not overinvest. Alright, so everyone got wrecked. Yesterday was a bloodbath. It's not that bad, but not yet. It can't get much worse. Well, it depends what you're holding, right? Alright, so in this video, I'm going to talk about crypto, talk about HEX first, and then I'm going to get into the stock market, equities, and the news. Alright, so listen, guys, go check your balances for PulseChain and PulseX. Make sure they're correct before it's too late, because it's sounding or looking like it's right around the corner, the launch, which is ironically perfect timing, right? Because Bitcoin and the crypto market's getting annihilated with pretty much the Fed interest rates being hiked and the global economy contracting. So the writing was on the wall. I don't know how people didn't see this. There's also all the FUD comes out, right? Like back in 2017, it was like Tether FUD, and now there's Terra FUD, another stable coin. Oh, look at this. This tweet was deleted. Oh no, this one. I didn't delete this. Whoever, did CNBC delete this? Hilarious. Anyways, you guys could read that. Terra bought an additional 1.5 billion of Bitcoin. That's a lot, when we're talking billions. And this was a tweet 4 days ago, something like that, or May 5th. They are probably responsible for why Bitcoin is holding up so well during the risk asset sell-off. This is from Pompliano. Hilarious. That didn't age well. Anyways, yeah, let's look at HEX. So, I look at wallets. I do some chain analysis. There's a lot of dry powder on the sidelines, guys. And I believe that a lot of people are just waiting for the confirmation of some date of when PulseChain launches, and HEX is just going to rally because everyone wants their copy of HEX on PulseChain, right? It's that simple. Makes sense. Will it rally, then maybe dip right before? Mainnet, we'll see. I mean, play it safe. Just don't make too many moves. Anyways, it's bottomed out. I mean, look, we've got major support around about 14 cents. Okay, it's being defended there. And I believe we're very, very close. Now, you could get all conspiratorial and say, or is this all being timed for the crypto bear market or mini bear market? Because everything is intertwined with macroeconomics and essentially, central bank printing and interest rates. Now, for months now, since Q4 of last year, I've been saying this was all going to happen, right? Inflation's running too hot. It's running so hot that it's actually putting the economy into a recession. And now the economy is in a recession. It is. It has been all winter. And it's because the money's drying up. Where's all the money going? Well, prices have gone up for numerous reasons, right? From kinetic tensions geopolitically, from the supply chain just breaking, from all the lockdowns, and I don't want to say too much, and all the stimmy checks, it's, everyone spent them. They put down payments on new cars. Used car prices went up by like 40%, and groceries, everything, utilities, raw materials, wood, metals, construction, everything. So commodities have gone up, except for gold and silver. But and I'll talk more about all that. What I'm trying to say is people's savings has dried up. Now and people aren't going back to work because inflation's so high and gas prices have also gone up, right? So now if they go back to work, they're not making as much. Is it worth it? So eventually we're going to see pay increases. What I'm trying to say is there isn't extra money to go into the crypto market or the stock market. When the economy is contracting because of such high inflation, people's savings get eviscerated, and then they have to dip into their investments to start paying for daily or for their livelihood, right? So, and it's really bad. Let me explain. Credit card interest rates have been going up now because rates have been pushed up. The free market has been pushing up the rates on bonds, okay? Not just the Fed. And the Fed's only gone up, 75 basis points? That's really nothing in the grand scheme of things, but that's all it takes when the bubble is so highly leveraged and indebted, right? And the only reason the DXY has been going up is because of the cleanest shirt in the hamper, right? And the geo risks going around globally, right? So, but you have to understand, mortgages have gone up substantially. The ones that aren't fixed. But even if they're not fixed, I mean, the cost of gas has gone up. I mean, depends what most people commute, but it all adds up, right? So if your gas costs $200 more a month, if your utilities cost $100 more a month, if your groceries cost another $100 more a month, if everything costs a little bit more, it all adds up to you have no discretionary spending money left. So then you're like, well, I can't buy any more stocks. I can't buy any more crypto. Okay. And then the prices of assets, from equities to crypto to growth stocks, everything just gets annihilated. And it's that simple. Now, going back to HEX, there's still money left in the crypto ecosystem, right? Sloshing around. They don't know where to put it. All the NFT degens, all of them. And a lot of them will go to stable. So hopefully, what I'm hoping is PulseChain launches like as soon as possible as the crypto market keeps falling. And then the Richard Heart ecosystem becomes a black hole just sucking in what capital is left into it. And that's perfect timing if this all comes together this month, because in about a month or two, the Fed will capitulate. They will stop raising rates. They will start lowering them. They will do yield curve control, and eventually they're going to do more QE. And at that point, that'll be the massive wealth transfer, the biggest one ever that we've ever seen, or we will ever see probably in our lifetimes. Because after that, everyone in the world, and Wall Street, all of them, are going to realize that this will never end, that they can't ever normalize interest rates. Because if they do, essentially the global economy just implodes. And I know that sounds dark, but we're going to be fine, right? We'll be the shiny city on the hill. So that's it. I mean, the Richard Heart ecosystem is just going to, I don't know where it's going, but it's probably going up. And that's just that. It's starting at zero, right? Well, at least PulseChain, and then everything on it, and then PulseX. And then capital, trust me, there's not going to be any liquid HEX once PulseChain's live on the PulseChain network, right? I don't think there's going to be, who's going to sell initially for the first few months, who's going to sell their HEX on the PulseChain network? It's going to be, and there'll be liquidity pulled And that's why thinking you're going to get cheap hex day one when it launches, I wouldn't risk it. I really wouldn't. So as soon as everyone kind of knows, all right, in about a week or two for sure, Richard hasn't said anything to the contrary. He has said we're looking at mid-May, right? And he hasn't. Today he just came out and he's like, "You guys really need to check your balances." That sounds like we're really getting there. Like, and you want to be paying attention, okay? I don't think you guys should be trading and degenning like day one, because it's going to be super illiquid. It's going to be wicking up and down all over the damn place. If you do anything, I'm dead serious. Just little pocket change. Like, if you lose it, you won't even like blink. And you kind of want to have all your ducks in a row and ready to go, right? Before it's live. All right. So I'm pumped, man. It's this summer. I believe our lives are going to be changed forever. All right, let me talk about Maxi for a little bit. Just a little bit. Don't want to, because listen, Maxi doesn't matter. Hex does, okay? Because Maxi's nothing without it. Hex. I do believe Hex needs to go up first, and I'll talk more about it, okay? But it's worked out pretty well already. It about a 24% premium on it, and I'll give more alpha on it. I just don't think now's the time. It's not the right time, because we need Hex. We need the market to realize where Hex is going to be very, very soon, which is going to be much higher. Also, a lot of early adopters, big holders got out. Perfect. That's what I wanted. I don't want to see noobs who bought higher give up now and throw in the towel. If you did, just come back. You don't want to miss out. You're going to be kicking yourself because, listen, the rally could be insane. I mean, Hex could have hit all-time highs within a couple days, like right before PulseChain mainnet goes live. I don't know if it'll do that, but if it did, it wouldn't surprise me whatsoever. So you're not going to have time to get in. And once these whales start competing against each other to get their Hex back, it's just gonna listen. It's very illiquid. There isn't much Hex left on the market. Stakers were getting closer to 100,000. It's perfectly being distributed. Basically, you don't want to miss out. I'll make more videos. All right, so let's talk about the stock market and Bitcoin and Ethereum. Everyone got wrecked as I was expecting. And I was warning for like months, right? So I bought call options on VIXI and VIX and SQQ. Doing real well, although the VIX should have gone higher, and it's being manipulated. It's not fair, I know, but it's what the PPT team does, right? But still good gains. Better than losing money, right? So during corrections and bear markets or mini bear markets, just not losing money means you're still in the game for the next bull market or cycle. And this game it's not over. We might be in like the 7th inning, something like that, but it's not over. The Fed will capitulate. And I know this for a fact, because what are they going to do? Paul Volcker style, raise interest rates? And it's going to have to be more than 20%. It would be like to 30%. Everyone in the country, everyone in the world would be out on the streets, literally. So they're not going to do that. Plus, it's beneficial to inflate the debt away. They're just playing a game of ebb and flow. And I said this months ago, I'm like, they need to slow inflation down. And the only way they could really do it is to dump equities and commodities and oil. And that is why, and honestly, I was kind of impressed how Bitcoin was holding up this for the past few weeks. All right, so here's Bitcoin. Right now, it's on some support, maybe a little dead cat bounce, relief rally with equities. Coin. A lot of the big tech companies are down, especially the ones related to crypto. That's probably also hurting crypto. Um, then the Grayscale Trust still net seller, and you get a discount if you buy the ETF. Very bearish for Bitcoin. So why buy the underlying physical asset when you could just buy the ETN? It's technically ETN, and get it on discount, right? So it was awesome on the way up, but double-edged sword on the way back down. Anyways, where's Bitcoin going? I'm not sure. It all depends on timing of when central banks capitulate. Japanese central bank is just printing away. The European Union, the EU, Lagarde is did they raise rates a little bit? I think they did, or tighten a little bit. I thought I saw that in the news. But ahead of all of them is the U.S. central bank, right? So whenever he capitulates, which I don't think it's going to be, like, it's not going to last. This won't last long because it's happening so quickly. I'm thinking by the end of this month or next month, something like that. Depends how fast the equities markets keep selling off, right? There's no reason for equities not to keep selling off. It's just a giant bubble. There's still so much room for it to fall. And I believe something's going to blow up if it hasn't already, right? So there's some support around 21,000, and then like maybe 16,000 around there, 15,000 for Bitcoin. And we could look at a 3-day chart. I do have a buy on the 3-day. That doesn't matter. Like I said, we're getting a little relief rally right now. Just zooming out, I mean, there's a lot of support around 14,000. Would a wick down there? Maybe, temporarily. Also some support around 17,500. I believe 17,500 would be probably where, I don't know. It's somewhere around here. It doesn't matter, right? And then it'll bounce. Will it make a new all-time high? I do believe cryptos will make a new all-time high again once the central banks capitulate and equities, all the boomers' retirement is gone up in smoke, and it's not good politics. So, because they're sacrificing the market to bring inflation down, to buy themselves a little more time, because they can't let it keep running like this, especially going into summer. Because if they do, I mean, like I said, it's just ebb and flow. They'll let inflation go up again, then maybe let markets dump again, and it just buys them a little more time, a few more years, and then they'll do some sort of global currency reset, or what's really going to happen is probably more geo risk globally. That's what'll probably happen. I don't know. It's going to be interesting. Using this decade. Here's the FANG index. By the way, you see this dip right back here? That was the March low of 2020. The COVID bottom, right? And look at this massive bubble ever since. That's from all the stimulus, right? I mean, I wouldn't be surprised if we revisit that previous highs of February 2020 and then bounce and rebound on the equities. Here's the thing, though. I do not believe the stock market will make new all-time highs. Can it? Yeah, but I don't think they're gonna pump that much stimulus into the system the next round they do it. And not just that, they have to pump way more into the system to do it, and that'll just cause serious runaway hyperinflation. So they're not going to do that. They're just going to let the market fall a little bit lower, and then, you'll get that. So here's what I'm expecting, something like this, and then the wick down there, and then rebound, some sort of reversal, maybe get close to previous all-time high, and then something like this, right? But it also all depends on how bad inflation does get. If full confidence is lost in fiat, then you might see a Venezuela-style melt-up still, unless this was the Venezuela-style melt-up and now it's done. We'll see when we get there. Here's the VIX on the bottom left corner. Did pretty good. I was expecting it to be up in like at least the 50s, but like I said, it's kind of weird that it's not higher. And there's actually an article about it. Here it is. Why isn't VIX spiking while stocks drop? It should be higher. They're suppressing it. They don't want anyone to be able to hedge and make money. They want you poor, right? And happy. Shit pisses me off. It really does. And that's another reason why a lot of millennials and everyone goes into crypto, because equities are manipulated, especially gold and silver, right? But it will be a managed retreat because they will lose control. I mean, Clown World can only clown so hard before it breaks everything. Yeah, there's some support on the NASDAQ where the price is at right now, around 11,680, but there's no reason. There's no reason to hold equities. The Fed could still do another 25 basis point rate hike because they're so behind the curve on inflation, and politically wise, they oh yeah, here, let me show you. Biden came out yesterday and said his number one concern is inflation, and that's because nothing will get you out of office, and the midterms are coming up. I don't know. I can't find it. It doesn't matter. Tweeted it. You guys need to be following me on Twitter. If you're not, you're missing out. Anyways, back to charts. Yeah, it's on some support right here, but why? It's just traders right now who cause relief rallies. But as inflation is high, let's say people are looking at their IRAs and whatnot, 401ks, and they're probably thinking to themselves, I need this money, and the market's dropping now. And I did say this a while back. I'm like, I don't think anyone's anticipating boomers pulling out their investments out of the stock market and then taking it out earlier than expected so they could afford to keep their lifestyles, and they might want to start buying things now because they might start anticipating higher inflation in the future. So they might want to go and buy everything they will need ahead of time now, right? Kind of like hoarding. And that's the psychology behind inflation as well. We're not there just yet. Oh shit! I was at a barber. There's a guy in there, and he was like a big real estate guy, mogul. Not mogul, but he had millions in real estate. I onboarded him, by the way. Did good. Into HEX. He was talking about gold and silver too. To the barber. So I was just listening. I was waiting in line, and he knew a lot. It was surprising. I was surprised because usually these guys are idiots. Well, not idiots, but they're really they know everything about real estate, but they don't know anything about inflation and the markets and interest rates. And he was saying, buy gold, and he was saying, well, I'm not selling. I know rates are going up right now, but these properties are going to still be worth a lot in the future. And I think he's anticipating even higher inflation in the future, which he is correct. So I do believe home prices are going to drop temporarily, and they're already starting to drop. No one can afford homes at these prices. So that does make me wonder, okay, yeah, so property may hold its value, but at the same time, if inflation's wiping everyone out, and it's not like millennials have a lot of savings, who's going to buy from you, man? Like, who's gonna buy it? Maybe he's thinking rental property, but taxes will go up on it. Maintenance will go up on it with inflation in the long term. So, I do not think he's anticipating this summer's drop in real estate because, for one, banks aren't lending because they're not stupid, and they pretty much stopped lending. Zillow's home flipping business went under. The other two companies whose sole purpose was home flipping, that would buy homes online, or you could buy it online. I don't want to get into it, but rates on mortgages are going up. Home refinancing has completely dried up. So that also is another red flag. It's another canary in the coal mine, right? Another reason why equities are dropping and crypto and everything is because the consumer, the average person, normie, is they're done. Now, so right now, credit card usage is starting to skyrocket, and that's because everyone has already tapped out their equity, their lines of credit, and they've already refinanced their homes, and they can't refi anymore. And because of interest rates going up, there's no point of refi because you're not going to get cash out of your home. And people use that cash to do. They might use it to buy a car. They'll use it to renovate their homes. They might use it to start a business. They might use it to invest. They might just spend it on vacations or whatever, which is the dumbest thing. But that party's over with. So, and anyone with a non-fixed mortgage is right now getting annihilated. So, and no one could afford homes. And everyone who could have afforded homes, they're probably selling stock, right, to buy those homes. And they already did in the past 2 years. Also, so home buying has sort of been pulled into the present from the future because of COVID, right? Everyone escaped the cities, and then they all went out and bought homes in other states and certain sectors. So that pulled buying demand from the future as well, pushed the prices up of all the real estate, and now interest rates are going up. It's like the perfect storm for another mortgage-backed security crisis, like back in 2007, 2008, right? So, and I do believe, again, there were some ninja loans, but it's nothing like it used to be in the past. It's just it's just another housing bubble. All right, I'm just gonna move to what else? Let's go back and take a look at let's take a look at the dollar, because this is important. So the yen is being printed out of oblivion. So Europe's looking like it's in a really bad spot, worse than the U.S. And a lot of it is because of what's happening in Eastern Europe there, because they a lot of Europe relies on Russia, right, for energy, and they refuse to do business and buy with the ruble. So the euro it's very weak, or it's weakening against the dollar, and through that backdrop, and another reason why I believe the escalation will continue, because it benefits the U.S. and people who had interests and business investments there, right? Anyways, and it's keeping the dollar strong in this macro global environment. Now, that doesn't mean that the dollar is really strong against commodities and everything else, but it's still helping it. Because imagine where oil and all commodities, copper, everything, even agriculture, would be if that wasn't happening right now to Europe, and the dollar would be even weaker. Gas prices might be even higher. They were going higher prior to what happened there. So and then there's the dollar milkshake theory, and that's still kind of playing out because all debt globally for corporations and everything is mainly in dollars because it's the most liquid market, and it's been the world reserve currency for so long. That is changing with time. It's just not going to happen overnight. Russia did come out and say they're going to peg it to gold, their currency, which China will probably jump on that bandwagon. And then that pretty much marks the end. And I believe the U.S. currency will sort of end up like the pound sterling, but probably worse because our lack of industrial output and our trade deficit. All right. But for now, the dollar looks like I believe it's going to break out a little higher, especially as equities sell off because knee-jerk reaction. The first flight to safety is back into the dollar currency. Kind of have just shoot up, kind of like a blow off top. How high will it go? I don't know. I mean, this also looks like well, it already broke up, but right here, if you look, you can see a giant cup and handle as well. This is a daily chart. I don't know, maybe 112, and then it'll pull back. Now, that doesn't mean it's really going to have any effect on commodities. It's good for trade, and it does kind of hold back inflation because the U.S. gets a lot of imports, right, from China and the rest of the world, and that keeps prices down for Americans. It's just, what do you think is going to happen when the Fed capitulates and the DXY drops back down? I mean, DXY dropping back down just to the 90 handle, which is technically still high historically, means massive inflation because our net export and import deficit, and the fact that our foreign cheap trinkets from China are going to cost more. Shopping on Amazon is going to cost way more. And that's just with the DXY falling back down to the 90 handle. If you zoom out, eventually it's going to drop way down. It could revisit new lows or previous lows around the 80 handle, and then eventually the 70, and who knows. But we're not there yet. Right now we're in a contraction and the deflationary part in the stagflationary macro cyclical environment. All right. And oil is incredibly important to what's happening right now. I do believe they need to get oil back below, well, it just fell below 100. Perfect. It's getting dumped right now for summer because a lot of people travel in the summer, right? And that's economic activity. And so a part of this inflation that this current admin wants to fight against, right, temporarily, for possibly political reasons, they need to get oil back down at least 80, around $80. Because at the pumps, I mean, what is the national average right now? $5? I only put premium in my cars, and man, it's about $5 for me. They need to get at least back down to 80. Because that's psychologically, for your average normie, that's it still sucks and it's still hurting them, but at least they're going to think everything's going to be all right for the rest of this year. Now, the question is the timing of all this, right? So this is a weekly chart of oil. Maybe 4 to 5 more weeks of downside on oil, and then the Fed capitulates, and then the oil's probably just going to shoot up like a rocket. And that'll take another 4 or 5 weeks. But they sort of have to time it with fourth quarter of this year. And that would take you into November. So, they'll just probably release more of the strategic reserves during this time. But they really have to smash oil right now. And how are they smashing oil? Well, by dumping equities, by raising rates. So I wonder the next FOMC if he's going to raise it 25 basis points or 50. I think it really all depends on where the market's going to be at. Let's go look back at the markets real quick. Let's go off of the S&P 500. So I drew this a while ago, right? And it's playing out. Guess I'm thinking, you know what? Let's take it to a 3-day chart. Here we go. I don't know. It's not lining up well. The moving averages. This is better. The weekly. So we broke through our first moving average here, 52 week. Here's the 100 week moving average, and I believe that's where the S&P 500 is going, and the rest of the market's gonna, fall. It's different for the Nasdaq. The Nasdaq's probably gonna visit my blue line, but the S&P 500 is probably going back down to 3,600 in the next 4 to 6 weeks, and that's when the Fed's gonna capitulate, and then we'll get the rebound. I don't know how high the rebound will go. Probably go pretty high. Maybe near all-time highs, but not quite making new all-time highs, and that'll take us into like Q4 of this year. It'll be like the Wall Street cheat sheet. That'll be your giant bull trap, and then eventually QE and whatnot. And when they do QE, I don't know where the bull trap will be. Will it be back down? Will it be back down like here, or will they do QE and the market will be up here and then it'll just rally higher into a Venezuela-style bull market? I don't know. I don't care at that point because my mining stocks and my crypto is going to be it's going to be time traveling through black holes. That's how high we're going. We're past the moon at that point. This is oil and gold, and nobody in the resource sector, all the other YouTubers don't even talk about this. I'm like the only one. It doesn't matter. Nobody watches me anymore, and they don't pay attention. I'm just too right. So they hate me. Alright, so yeah, oil's going lower. I expect it to with the rest of the equities, and so will gold. By the way, I shorted gold and silver mining stocks. Doing great, man. Doing real good with leverage ETFs. It's awesome. Yeah, so I'm doing great, man. I'm going to have a bunch of dry powder to buy the dip. And that'll be the last dip buying opportunity this month and next in mining stocks. After that, you just hold, and it's just going to just hold and watch your portfolio explode in value as the wealth transfer plays out. And the world will be ours, right? And the time to buy is when there's blood in the streets, and for gold, it's not there yet. Still in the bull market. But right now, it's pulling back. Here's a weekly chart. I really actually hope it breaks this support right here on this moving average and at least gets down to like 1780, 1787, around there. And that'll be a perfect dip buying opportunity for mining stocks. Can they smash it lower all the way down around 1650? I doubt it. I believe too many people know that if the market dumps even more and substantially, they'll front run the Fed capitulating. Right now, it's just traders and banks just dumping the metals so they could buy back on the dip. And that's what I believe is happening right now. Speculators just driving down the price, and a lot of maybe people do actually believe the Fed could somehow stop inflation, which they can't. We know that, but they don't know that. And anyone who thinks that, they can't. What is Powell going to do? Raise rates over 20%? Right now, with what has happened, how much money has been printed? How much fiat has been printed globally? Rates have to go above 20% to normalize, to live in a normal world. That's never going to happen. And there's so much malinvestment, like, where is it? Oh, I didn't bring it up. let's take a look at Kathy Wood's arc. This is hilarious. So here's all the malinvestment. Here's Meta, here's Tesla, here's ARK, here's Netflix. And there's more, right? Absolutely annihilated, wrecked. Just wrecked. This thing, I mean, if it doesn't even bounce and like by the end of this week, which it probably won't, because I do believe by that the market will sell off by the end of this week. There's nothing they could say or do to get the market back up, because there's no reason. The economy's contracting already. Economic data is probably only going to get worse now. And here is the thing, though. If the economic data is getting worse, the market actually might see some nice relief rallies until the Fed capitulates, because if the economic data keeps getting worse, then guess what the market's going to do? They're going to anticipate the Fed capitulating and not raising rates. So from now on, bad economic data is good for the stock market. I know it's ass backwards, but that's because they're anticipating the Fed not raising rates. And we've already actually seen that play out back in like 2019 when the Fed started raising rates again for the first time. And then Trump was like, oh, they're trying to sabotage my economy. Anyways, and then they backed off, right? Because the repo market. And then what happened after that, right? So, but yeah, I'm waiting for a Lehman moment, man. This looks like a Lehman moment right here. I mean, this is bad. A lot of people lost a lot of money. Drops to $35. I bet their phones are ringing off the hook right now. Like, I want my money back. Alright, so, yeah. A little bit lower on gold here. Silver follows gold. I don't know why people keep asking for me to do TA on that. It doesn't matter, man. All other commodities, agriculture, copper, aluminum, uranium, platinum. Platinum, big opportunity there. I'm looking at some stocks. Yeah, silver should fall back to $20. Awesome. Great buying opportunity. And, you know, in the private group, we shorted all this and made a killing. And hedged our entire long positions in our portfolio for our long-term holds, our core positions. I did sell a lot of miners, though, in the past, like, months. So I could raise cash to short mining stocks in the resource sector, and to place a hedge and go long on the VIX and SQQQ, shorting the market. And it's been super profitable. And I'm really proud of myself. And whoever listened to me, they're doing good. And it's not easy, but, you know, I don't always get it right, but sometimes I do, big time. And then that's when it matters. So, looking good. So, super long term, like, by midsummer, the resource sector is going to take off. Crypto is going to take off again, and that's the wealth transfer. So, hang in there. All right, guys. Next video, I'm gonna talk more in depth about HEX and PulseChain and all that, because it's coming out, and I'll give away some alpha. Why not? Because it's not gonna matter. But you don't want to miss out on that. You really don't. All right, guys. So get your HEX now. Till next time.